Are you looking to grow your wealth while earning steady income along the way? Dividend stocks are a great way for Canadians to do just that. But finding the right dividend stock takes more than just looking at high yields. You also want to look at companies' strong fundamentals, sustainable earnings, and long-term growth story. In this video, we'll be looking at 14 of the best Canadian dividend stocks for 2025, covering their yields, payout ratios, and what makes each company worth holding in your portfolio. Let's get started. First up is Canadian Natural Resources, one of the largest crude oil and natural gas producer in the world. They operate in Canada, the UK, Gabon, and Côte d'Ivoire. Beyond profits, CNQ is part of the Oil Sand Pathway to Net Zero initiative, aiming to reach net zero emission by 2050. It's an energy stock that's actively planning for the future. The stock currently pays a 5.43% dividend yield with a payout ratio just under 60%, suggesting plenty of room for future growth. Next, Fortis. This is a utility company that's been around since 1885 and is famous for one thing: 50 straight years of dividend increase. It serves over 3 million electricity customers across Canada, the US, and the Caribbean. Electricity is a non-negotiable expense, and Fortis benefits from the reliable demand. Its 3.66% dividend yield comes with a payout ratio of about 76%, and Fortis expects to grow its dividend by 4 to 6% annually until at least 2027. The company is also cutting its emission, aiming for 80% reduction at TEP by 2035. RBC isn't just Canada's biggest bank. It's the 11th largest bank in the world by market cap. With 17 million customers across 36 countries, it is a global leader in the financial services. Its earning and asset base have grown steadily for more than 50 years. Right now, it offers 3.53% dividend yield with a safe 46% payout ratio and a reasonable PE ratio of 13.9, making it a strong, stable option for dividend investors. Suncor is an integrated energy company. They produce oil from oil sands, refine it, and even operate Petro-Canada gas station across the country. They've been paying quarterly dividends since 1992, and today offer a 4.53% yield with a 46% payout ratio. The dividend looks secure. Suncor is also expanding its renewable energy, which adds another layer of long-term opportunity. TC Energy runs over 92,000 kilometers of natural gas pipeline and nearly 5,000 kilometers of oil pipelines throughout North America. That is infrastructure you can't easily replace, and it creates reliable income. They also operate in clean energy projects, including wind and solar. TRP currently yields 4.89% with a higher payout ratio of 88%. While that's a bit elevated, its steady revenue streams support it well. Founded in 1919, Canadian National Railway moves over 300 million metric tons of goods each year across a massive 20,000-mile network. Rail remains a critical part of North American logistics, and CN has grown its dividend consistently for 2 decades. Its 2.47% yield may be on the lower end, but it's backed by a solid 48% payout ratio and a healthy balance sheet. TD is Canada's second largest bank, with 26 million customers globally. In Canada alone, over 11 million people bank with TD Canada Trust. The bank has paid dividends for an astounding 164 years, and since 1995, it's grown those dividends at a compounded annual growth rate of 11%. TD currently offers a 4.36% yield and a 42% payout ratio, a classic, reliable income stock. Enbridge operates one of North America's most important energy infrastructure networks, transporting oil and gas through pipeline across the continent. It just completed a big acquisition of Dominion Energy's utility business, making it the largest natural gas utility operator in North America. Its yield is high at 5.92%, but so is its 133% payout ratio. That said, Enbridge has increased its dividend for 30 consecutive years, and its diversified revenue stream helps support it. Manulife is Canada's largest insurance and financial services firm. Founded in 1887 and once headed by none other than the Prime Minister John A. Macdonald, it currently pays 3.96% dividend with 60% payout ratio. In the last 5 years, the dividend has grown at nearly 10% annually, making Manulife a strong dividend growth story. You might know ATD through its brands, Circle K, Max, and Couche-Tard. It is a global convenience store powerhouse. While the dividend yield is just 1.08%, the payout ratio is only 19%, meaning there's a huge room for future increases. Couche-Tard also rewarded investors with strong stock returns last year. BMO is Canada's oldest bank, with a history dating back 204 years, and dividend payments going back to 1829. With over 12 million customers, it has a stable business model and dividend policy targeting 40 to 50% of earnings. Its current yield is 4.4% with 59% payout ratio, making it another core bank stock for Canadian dividend investors. GRTUN is a global real estate investment trust with 137 properties in 7 countries, including Canada, the US, Germany, and the Netherlands. Its portfolio totals nearly 63 million square feet of leasable space. Much of it is in prime logistic and industrial locations. GRTUN pays 4.82% dividend with a 66% payout ratio, offering a great way to diversify into real estate income. National Bank is Canada's 6th largest bank, but it's rapidly expanding beyond Quebec. With nearly 400 branches and close to 1,000 ATMs across the country, the bank manages over $350 billion in assets and aims to keep its dividend payout between 40 to 50%. Currently, it pays a 3.53% yield, backed by a 45.6% payout ratio. Last but not least, Pembina Pipeline. This Western Canada-based energy infrastructure firm has been operating for over 65 years, transporting oil and gas through long-distance pipelines. What makes Pembina unique is that it pays monthly dividends, a rare treat on TSX. It currently yields 5.52% with a 90% payout ratio. There you have it, a breakdown of 14 top-tier Canadian dividend stocks in 2025. Some deliver high income, other long-term growth, and a few give you a peace of mind that comes with decades of stable payouts. If you learned something new, hit the like button, subscribe, and don't forget to turn on the notification for more Canadian investing videos. Big thanks to Savvy New Canadians for their original article. We've linked it in the description below if you want to dive in deeper. Thanks for watching.